In this video, I will show you the perfect indicator for trading reversals. This indicator stands out as one of the finest tools to employ when engaging in scalping. Its potency unveils concealed insights, delivering a lucid perspective of the market. The focal point of our discussion is the Heikin Ashi RSI oscillator, an exceptionally versatile tool. It illuminates the path of trends, discloses trend reversals, provides entry and exit signals, pinpoints overbought and oversold zones, and deciphers an array of market patterns. Today's video is geared towards unraveling the intricate workings of this indicator and its application for entering positions. Accompanying this insight is a lucrative scalping strategy that maximizes the indicator's potential. First and foremost, let's integrate the indicator into our chart. Proceed to the Indicator Search tab and locate the Heikin Ashi indicator. Opt for the version created by J. Rogers and seamlessly incorporate it into the chart. Transitioning to the Indicator Settings tab, a plethora of customizable options unveils. Initially, consider the indicator's length, adjustable based on the desired RSI indicator span. Amplifying this value dampens sensitivity and precision, while reducing it heightens responsiveness to price fluctuations. Given our intention to present the indicator on a lower time frame, let's set the value to 10. The subsequent setting pertains to open smoothing. Enhancing this parameter amplifies bias towards prior opening values, enhancing the visual representation of trend strength. Hence, a prudent choice is to adjust the smoothing value to 5. A deeper scroll reveals a setting to modify the RSI plot length. Furthermore, the option to include a stochastic RSI exists, although it won't be employed in this context. Consequently, default settings will be retained. Having tailored the input parameters, our focus now shifts to style adjustments. Begin by eliminating the RSI histogram overlay and shadow. Subsequently, strip away all stochastic indicator components. With this, the setup is complete. The indicator encompasses 3 core elements. The foremost component is the Heikin Ashi candlesticks. These candlesticks portray a modified rendition of price action, adept at smoothing out noise and facilitating the identification of trends and reversals. The second constituent encompasses overbought and oversold zones, denoted by green and red regions situated at the 20 and -20 levels, respectively. Whenever the candlesticks intersect these zones, it signals a state of market overboughtness or oversoldness. The concluding component materializes as the center line, positioned at 0. This delineation embodies equilibrium, residing at the midpoint between bullish and bearish momentum. A traversal above the center line by the oscillator signifies an augmentation of bullish momentum, hinting at a prospective uptrend. Conversely, a crossing beneath the center line implies an escalation in bearish momentum, suggesting a potential downtrend. Initially, it's pivotal to grasp the indicator's interpretative framework. The simplest and most direct approach involves discerning overbought or oversold signals. When the oscillator's candlesticks breach the overbought zone, it indicates a potential pause in the uptrend or the inception of a bearish reversal. Conversely, when the oscillator's candlesticks reach the oversold zone, it signals a possible pause in the downtrend or the initiation of a bullish reversal. Within this spectrum, there exist extreme overbought and oversold levels, emanating stronger signals than their regular counterparts. The extreme overbought threshold is set at 30. When the Heikin Ashi candlesticks attain this level, it implies a heightened likelihood of a bearish reversal transpiring. Conversely, the extreme oversold territory lies at the -30 threshold. Should the Heikin Ashi candlesticks converge on this territory, it underscores a considerable chance of a bullish reversal materializing. This approach encapsulates the most direct method of interpreting the indicator. However, alternative strategies might yield even greater profitability. One such approach involves detecting disparities between price action and the indicator. An illustration of this concept is evident. While the price was reaching higher highs, the Heikin Ashi candlesticks were manifesting lower highs. This divergence signals an impending bearish reversal, indicating a potential reversal of trend towards the downside. After examining the aftermath of the executed move, it becomes evident that the anticipated scenario did indeed unfold. It's apparent that the price trajectory is manifesting lower lows. Nevertheless, when scrutinizing the Heikin Ashi oscillator, a different picture emerges. The candlesticks are forming higher lows, underscoring the feebleness of the price's declining lows. This discrepancy indicates a conducive environment for a potential bullish reversal. Upon inspecting the price behavior subsequent to the emergence of the bullish divergence, it becomes apparent that the price underwent a robust upward reversal. To construct a comprehensive strategy incorporating the Heikin Ashi RSI oscillator for position entry, let's augment the chart with additional indicators. The primary addition will be the exponential moving average, EMA. Navigating to the Indicator Search tab, locate the EMA indicator and select the one developed by TradingView. Integrate it into the chart. Following this, introduce the volume indicator to the chart. Search for the volume indicator and subsequently select the TradingView-made volume indicator to incorporate it into the chart. Now let's fine-tune the indicator settings. Access the EMA indicator settings and access the Input tab. Modify the EMA value to 200. Proceed to the Style tab and alter the indicator's color to enhance visibility. Transitioning to the volume indicator settings, adjust the M8 length to 30. Upon completing this adjustment, navigate to the Style settings and activate the Moving Average feature. In a bid to render the line more discernible, modify the color to white. This concludes the necessary configurations. The strategy implementation entails utilizing the 200-period EMA to ascertain the market trend based on whether the price is trading above or below the EMA. Subsequently, the Heikin Ashi RSI oscillator will be employed to pinpoint the precise entry point for a position. Lastly, the volume indicator will be instrumental in gauging whether the market possesses sufficient trading volume to warrant entering a position. In this context, it's evident that the price trajectory is exhibiting an uptrend. This inference arises from the observation that the price remains positioned above the 200-period exponential moving average, EMA. Simultaneously, we note that the price recently underwent a pullback to the EMA, promptly followed by the emergence of a bullish candle. This bullish candle serves as a noteworthy signal, reflecting positive market sentiment. Analyzing the Heikin Ashi RSI oscillator, it becomes apparent that it signaled an oversold market condition. This observation aligns with the candlesticks exiting the oversold zone and transitioning to a green hue. This transformation underscores the renewed upward trajectory of the price. Additionally, a bullish volume bar is distinctly evident. Notably, this volume bar surpasses the 30-period moving average on the volume oscillator. This manifestation signifies a notable volume of bullish activity, potentially propelling the price further upward. Considering these collective indicators, it's opportune to initiate a buy position. To mitigate risk, a stop loss will be set at the recent swing low. As for the take profit, a prudent approach entails targeting a 2-to-1 risk-to-reward ratio. Let's now observe the trade's development. Furthermore, it's possible to enter trades without necessitating the incorporation of the exponential moving average, or EMA. In this particular instance, a downtrend in the price's trajectory is evident. This conclusion is drawn from the pattern of the price forming lower lows. However, a contrasting pattern emerges when examining the Heikin Ashi RSI oscillator. The oscillator indicates the formation of higher lows, suggesting an impending bullish correction. Furthermore, the oscillation of the red candlesticks from the oversold zone to the green zone is significant. Lastly, the presence of bullish volume bars exceeding the white moving average attests to the market's buoyant volume. These multiple indicators align to indicate a favorable entry point for a buy position. As a precautionary measure, the stop loss will be established at the recent swing low. For the take profit, maintaining a 2-to-1 risk-to-reward ratio seems prudent. Once again, we await the unfolding of the trade's outcome. Presently, the prevailing market scenario reveals a downward trajectory in price, substantiated by the price's position below the 200-period exponential moving average, EMA. This positioning signifies an underlying bearish sentiment in the market. However, recent developments warrant attention. A notable pullback toward the EMA materialized, followed by the emergence of a substantial bearish candle. This occurrence serves to reinforce the prevailing bearish signal. In the realm of the Heikin Ashi RSI oscillator, a pivotal observation emerges. Specifically, the oscillator indicated a state of pronounced overbought market conditions. In tandem, the transformation of green candlesticks into red, immediately upon exiting the overbought zone, imparts a noteworthy revelation. This shift signifies the potential initiation of a downward price movement. Further fortifying the bearish stance is the appearance of a bearish volume bar, surpassing the 30-period moving average on the volume oscillator. This development implies the presence of ample bearish volume in the market. thereby augmenting the impetus for a downward price trajectory. Considering this confluence of signals, prudent action entails initiating a sell position at this juncture. In terms of risk management, a stop loss will be judiciously set at the recent swing high. As for the take-profit target, a strategic decision involves aiming for a 2-to-1 risk-to-reward ratio. With the groundwork laid, let's now closely observe the trade's progression and its subsequent unfolding. The versatility of the Heikin Ashi RSI oscillator becomes apparent as it offers multiple avenues for entering into advantageous positions. I trust you found the video enlightening. If this was indeed the case, I invite you to express your appreciation by liking the video and subscribing to the channel. Should any queries arise, please feel free to share them in the comments section.